New year, new tax rules, and it's having a big impact on your returns.
Well, some changes for the better and some leaving people really upset. 13 Action News anchor Yasmin Hassan right now is here in our studio to break it all down for us. Yasmin.
You're going to see a lot of changes. The standard deduction has nearly doubled. The write-offs have shrunk. The personal exemption is gone. Even the tax forms have changed.
What you want to look for is 4 key words on the front page of your tax return, which is your tax exemptions, exclusions, your deductions, and tax credits.
This year, there are no personal exemptions. That's the bad news. The good news is that the standard deduction nearly doubles. It's now $12,000 for individuals, $18,000 for head of household, and $24,000 for married couples.
So if you're going to go above that $24,000, you've got to prove first, I've got $24,000 of bills. Most people won't have that. Therefore, they take advantage of the tax law saying, well, the government's going to give me a break on the first $24,000.
This is designed to make filing easier, with less of a need to itemize deductions. That's also why the 1040 form is smaller this year.
Easier for me now because I don't have to fill out any deductions, so just less paperwork for me.
I did it online and it was like a lot faster, and I got more than what I got last year.
The child tax credit gets a boost this year as well, from $1,000 to $2,000, but the child must be 16 or younger at the end of the year to claim the credit.
Where the taxes are now, they're less than what I was paying before, so the new standard deduction, I'll get probably $1,800 more than last year.
This year, if you have kids right around college age, there's a new $500 tax credit. They have to be between 17 and 23 years old, and you have to provide more than half their support. Now, with all these changes, about 30 million people are expected to owe money to the IRS this year. That's according to the Government Accountability Office. Even if you don't owe money, you could still be seeing a smaller refund. 7 out of 10 Americans will see their taxes decline, according to the Tax Policy Center.
Probably pay about an extra $2,000 to $3,000 in total tax. It's due to the fact that a lot of the deductions that I was able to take in previous years are no longer applicable. The increased standard deduction, it just makes my deductions less valuable.
So we've also been hearing from you online. Kathy says that we got $1,000 less last year. Not too bad. Then Ryan says, I paid last year and I got a refund this year. And then Lindsay says, my return was great. I always had to owe every year and we're getting a large sum back. Couldn't be happier. So it's really been all over the board. But this is what you need to know. Penalties and interest may apply to any money you owe after April 15th. So that's why you want to file early this year, so you know if you have to owe money or if you're getting a refund.